More numbers now, this time coming from Asia, where stocks rose today as investors shrugged off concerns over the ongoing coronavirus outbreak. Mainland China's stocks were among the biggest winners regionally, with the Shenzhen Composite surging 1.55% and the Shanghai Composite also gaining 0.87% to close at around 2,926.9. Hong Kong's Hang Seng Index was 1.1% higher as at its final hour of trading. Crossover to Japan now, where the Nikkei 225 gained 0.74%, while the Topix Index, on the other hand, ended its trading day slightly lower at 1,718.92. In South Korea, the Kospi added 0.69%, finishing at 2,338.38, and in Australia, the ASX 200 finished its trading day 0.47% higher at 7,088.2. And in the U.S., the stock index futures rose this morning after the S&P 500 and Nasdaq eked out fresh round of closing highs on Tuesday. Around 6 a.m. Eastern Time, the Dow futures had indicated an implied positive open of more than 120 points, while futures on the S&P and Nasdaq also climbed. Corporate earnings remained in focus after Under Armour became the latest company to predict a hit from the virus outbreak, warning that it could lower sales by $50 million to $60 million. On the data front, though, the U.S. job openings fell for a second straight month in December to hit their lowest level in 2 years, and that shows a recent acceleration in jobs growth may not be sustained. Weekly mortgage applications are due later today, and January's federal budget figures also will be released at 2 p.m. Eastern Time. We'll take a breather from those numbers now. Nigeria plans to return to the international debt markets with a $3.3 billion Eurobond sale after staying out last year. President Muhammadu Buhari is seeking approval from the National Assembly to sell the Eurobonds this year. According to the advisor to the Minister of Finance, Yunus Abdullahi, $2.8 billion of that amount is set aside as external financing for the 2020 budget, while $500 million is for debt refinancing. Mr. Abdullahi says the government will embark on an international roadshow once the lawmakers approve the issuance. Nigeria held its last Eurobond sale in 2018, where it raised $2.86 billion. AngloGold Ashanti has sold its remaining South African assets to Harmony Gold Mining as the company exits the gold industry. Harmony will acquire the Mponeng mine and surface assets for about $300 million, and that's less than half of the book value of the assets, which will become South Africa's #1 gold producer. This deal marks the exit from South Africa of AngloGold, a company that emerged from a mining empire created by Ernest a century ago. The sale may also pave the way for AngloGold to move its primary listing from Johannesburg. Harmony will acquire the assets with $200 million of cash, plus deferred payments related to the performance of the operations. Still to come on Business Incorporated, expectations from South Africa's President Cyril Ramaphosa's State of the Nation's address, especially as it concerns the economy. Please stay with us. All is now set for President Cyril Ramaphosa to deliver the 2020 State of the Nation's address in Parliament in that's his third in 2 years. The address comes at a time when South Africa is battling a slow economic growth, ballooning government debt, high unemployment, and ailing state-owned enterprises. Our correspondent, Katligo Legodi, sat down with an economist, Dr. Azar Jamin of Econometrics, to assess expectations and wishes from the president's speech. Let's take a listen.
Increasing infrastructural investment, improving educational outcomes in South Africa, loosening up the labor laws and other regulations that are stifling small business activity, improving the running of state-owned enterprises and probably restructuring them in such a way that they are not such a drain on the fiscus of the country, and more generally just showing a commitment to improving economic growth as a means of sorting out the unemployment problem and the poverty problem. Unfortunately, there are huge ideological stumbling blocks in all that I have said. The majority of people in the country do not believe in such so-called market-oriented economic policies and would far rather see government intervening more in the economy. One of the issues that I didn't mention that are acting as a huge constraint on economic growth is policy uncertainty on a wide variety of fronts. The most conspicuous one of all is the notion of wanting to expropriate land without compensation and to change the constitution to allow for that. I believe that's totally misdirected, given that South Africa currently is food secure. We're exporting a lot more food than we're importing, and that is derived from a very efficient farming sector. To start interfering with the ownership of that farming sector, I think would jeopardize food security. Furthermore, government owns a lot of the land of the country, but why doesn't it use its own land ownership to actually distribute to the people? A lot of the land is owned by tribal chiefs who again are not distributing it to people. Why then start interfering in a private sector ownership of land that can be very destructive? The second type of political uncertainty relates to calls for the nationalization of the central bank, the Reserve Bank as we call it, and furthermore interfering with the mandate of the Reserve Bank to make it consider growth more importantly than inflation. That could be a path to destruction of our monetary base, as we've seen just to the north of us, where hyperinflation has proliferated. Another area of uncertainty is the introduction of a national health insurance scheme, the costs of which are grossly unaffordable, and yet the government keeps talking about that, creating a lot of uncertainty. The fourth one is drawing up a mining charter to try and gain the support of all the mining industry and its workers, and yet we don't seem to be making any progress in that regard. Another uncertainty is the minerals and exploration bill, which calls for government to immediately take 20% of any revenue that might be forthcoming from search for oil and other energy sources. All of those are uncertainties that visa restrictions, also the cost of broadband spectrum. Accessing broadband is very expensive in South Africa compared with many other countries, including in Africa. And we keep getting told, yes, we want to have stuff done in that regard, but we see absolutely no results. So what we are looking for in the State of the Nation and budget speeches are credible commitments to actually sorting out these problems. But as I've suggested, given the opposition to such ideas by the majority within the ANC, I don't know if they'll ever see the light of day.
The rand hasn't been doing that great, looking at what's happening, also at sectors from outside or factors from outside the country. What would you say, for the past 2 months, for the past 2 weeks, the economy, the rand hasn't been doing that great, looking at its counterparts nationally?
The rand has actually not performed too badly over the last 6 months. In fact, we were at well over 15 rand to the dollar in September and rose all the way to below 14 rand to the dollar by January. And this was notwithstanding the fact that we had the surprise resumption of electricity load shedding in December. We had the business rescue of South African Airways, and a lot of other poor economic indicators that suggested that the economy might be going into recession. GDP growth was negative in the third quarter after having been recovered to positive territory in the second quarter. And notwithstanding all that, the rand rose. Conversely, in the last few weeks, the rand has given back most of those gains. We're now back at around 14 rand 70 to the dollar. And you suddenly realize that the fears of the fiscal situation getting out of control and of us being downgraded still further are not foremost in investors' minds. What is foremost in investors' minds is the fact that by investing in South African government bonds, they can secure a 9% yield compared with 0 or 1% in bonds in advanced economies.
From South Africa now we turn to Zambia, where the economy is expected to grow by more than 3% this year, while the fiscal deficit is set to remain elevated as the government borrows more to fund spending. And that's coming from the country's finance minister. Zambia's economic growth has been hampered by electricity shortages after drought hit hydropower generation, but the government says it's focusing on building green energy capacity to plug the gap. Now, a one-stop border post that will fast-track trade between South Africa and Zimbabwe will be fully operational at the Bridge in 2024. South Africa's Home Affairs Minister Aaron Motsoaledi says the construction will include a building for immigration officials and separate traffic lanes for commercial, private and public vehicles, as well as a pedestrian pathway. A one-stop border will harmonize customs clearance procedures between the two countries in a crossing that is one of Africa's busiest land borders, with about 25,000 people and 500 trucks passing through daily. The minister says similar projects are also planned at South Africa's borders with Eswatini, Mozambique, Lesotho, and Botswana. And South Africa's MTN Group expects full-year headline earnings to rise as much as 50% and showing a slowdown from the previous year due to one-off items, including interest and regulatory fines in Nigeria. Nigeria accounts for nearly a third of MTN's core profit, but it has posed a raft of problems for the firm in recent years. MTN Nigeria has been dealing with a 330 million naira fine for failing to cut off more than 5 million unregistered SIM cards, a substantial reduction from the original 1.04 trillion naira penalty handed down in 2015. In January this year, Nigeria's Attorney General withdrew a $2 billion tax demand against the group, bringing to a close its latest disagreement with the government. And that's our show today. Many thanks for watching. I am BC Adebayo.